$25,000. That number is sitting right there in an official IRS notice, and if you make tips at work, it might belong to you. The IRS confirmed it. If you earn tips, you don't have to pay federal tax on up to $25,000 of it. And stay with me all the way to the end, because I'm going to show you the one step most tipped workers are quietly skipping, and if you skip it too, the IRS keeps your money, not you. I know money's tight right now. Bills stacking up, rent going up, and you're out here hustling for tips just to stay afloat. So when I tell you the government owes you a break, I'm not messing around. This is free. No lawyer, no accountant needed. Just a few minutes of your time. Let's get into exactly how this works. This came from a law called the One Big Beautiful Bill, signed back in July 2025, and it created a brand new tax deduction just for tip income. Here's the deal normally. Every dollar you earn in tips gets taxed by the federal government like regular income. Starting with your 2025 tax return, the one you're filing right now in 2026, you can knock up to $25,000 of those tips off your taxable income. Look right here at this official IRS page. It says the maximum annual deduction is $25,000. And if you're self-employed, like a rideshare driver or a freelance hairstylist, it says that deduction may not exceed your net income from that job. So the IRS is spelling it out in black and white. 25 grand off your taxes if you qualify. Now, this isn't money that just shows up in your bank account out of nowhere. It's a deduction, meaning it lowers the income the IRS taxes you on, which lowers your tax bill. Here's how it plays out. Say you're a server who made $40,000 total last year. Half of that, $20,000, came from tips. If you're in the 22% tax bracket, that $20,000 deduction could save you around $4,400 at tax time. Lower bracket, lower savings, but either way, that's real money staying in your pocket instead of going to the IRS. Now here's the part nobody's telling you about. Not every job qualifies, and not every dollar qualifies. Check this out. This is the IRS's official list. They named over 70 specific jobs that qualify, split into 8 categories: food and beverage, hospitality, personal care, entertainment, home services, and more. Bartenders, waitstaff, hairdressers, tow truck drivers, even wedding photographers, they're all on there. But here's the catch. Jobs like healthcare workers, lawyers, and financial advisors are not eligible, even if they sometimes get tipped. If your job's not on that list, this deduction doesn't apply to you, and the tip has to be voluntary. If a restaurant slaps an automatic 18% gratuity on a big group's bill, that does not count. The customer has to choose to tip you and choose the amount. No pressure. No fine print forcing it. There's also an income cap, and it matters. Right here on the IRS site, this deduction phases out once your income, what they call modified adjusted gross income, goes over $150,000 if you're single, or $300,000 if you're married filing jointly. So if you're a regular working American, and let's be honest, most tipped workers are, you're well under that line. This break was built for the person hustling doubles at the diner, not someone running a hedge fund. Here's something a lot of people don't even realize is stacked right on top of this overtime. Pay got the same treatment. Look at this line. It says you can deduct up to $12,500 if you're single, or $25,000 if you're married filing jointly, on the extra half portion of your time and a half overtime pay. So if you're clocking overtime hours, nurse, warehouse worker, factory floor, doesn't matter, that portion can come off your taxes too. Same income limits apply. $150,000 single, $300,000 joint. Quick gut check before we get to the most important part. This does not mean your tips are tax-free across the board. You still owe Social Security and Medicare tax on every dollar. Some states still tax tips too, depending where you live. And if you're married, both of you have to file a joint return to even claim this. Filing separately means you lose it. Okay, here's the part I promised you. This is the piece that actually decides whether you get this money or the IRS just quietly keeps it. This deduction is not automatic. Nobody applies it for you. Look right here. The IRS created a brand new form called Schedule 1A, and you have to fill it out yourself and attach it to your 1040 when you file. If your tax preparer doesn't know to add it, or if you're using cheap software that skips it, that $25,000 break just disappears legally. The IRS doesn't owe you anything if you never claimed it. Millions of tipped workers are going to file their taxes this year, get their regular refund, and never even know they left thousands of dollars on the table because one form got missed. So here's your move, plain and simple. When you file, ask directly, did you include Schedule 1A for my tip and overtime deduction? If the answer's no, stop right there and fix it before you submit. This law runs through 2028, so it's not going anywhere yet, but don't wait around, because the sooner you claim it right, the sooner that money's back in your pocket instead of the IRS's. Now, I want to hear from you. Drop a comment and tell me, does your job show up on that IRS list of 70 plus tipped occupations, or are you not sure? If this helped you out, hit subscribe, because where I break down the confusing stuff the government doesn't explain to you straight.